Hi, everyone. Welcome to 2023's second edition of Macro Matters. Again, we're trying to do this bi-weekly and talk about the issues that we see in the macro world that are most important for our members. Or in other words, we're trying to talk about the macro that matters. And that's what we're doing here on the Macro Matters podcast. And joining me again this week are Monique Thanos and Tony Zhang. Monique is an expert in quantitative finance, and Tony is my colleague at Geese College of Business, and as we discussed before, an expert in everything. So welcome, Tony. Welcome, Monique. Thanks for joining me today.
Hi, Rich. Hi, Monique. So glad we come back again in 2 weeks.
So we touched on it a little bit last week on crypto, and we want to cover crypto and AI this week, but we touched on a couple weeks ago crypto as a duration asset and maybe impacted by interest rates. And this is something that we had talked about even, I think, last year about when we were talking about duration and what assets were impacted. So, Tony, I want to start with you and get your thoughts on crypto as a duration asset. And is that kind of what we've been seeing in the markets this year, where crypto's had a pretty good start to the year?
Well, Rich, I think you hit the right point. As what we discussed in last 2 weeks, last episode of the Macro Matter, we comment especially about the asset classes with long duration. And we think about the crypto as an asset classes. Crypto doesn't have any cash flow in general, right? So this we can easily categorize crypto asset as one kind of a asset class with extremely or infinite duration. Definitely long duration asset classes. And this year, right from the beginning of this year, we have seen the asset classes with long durations did extremely well, including both high duration equity now and also crypto asset as well. This is something that what we have anticipated. What actually are the driving force behind the performance in this high long duration asset classes are actually more interesting to discuss. Well, one of the key issue apparently was that the interest rate environment, right? This is every people right now is talking about the especially during the high interest hiking rate period when Federal Reserve took a very harsh or hawkish stance. All of the asset classes with long duration would suffer. Now here, this sentiment apparently has shifted dramatically. Now it's with, even though the interest rate has been very high or maybe historically high over the past 5 years, but the sentiment has shifted dramatically. Well, in terms of discussing about the main sentiment drivers behind the crypto performance, I would actually like to maybe refer to Monique, because Monique has been working in this industry for many years. I think maybe Monique might have some share of thoughts regarding the crypto's performance.
Yeah, I want to definitely pivot to Monique on this because, to your point, Tony, I mean, interest rates, which we talk about duration, and it's actually the long part of the bond curve, was the first to move higher last year, and that ultimately led to these duration in other asset classes. But we've since seen that reverse, and so my eyes are drawn to maybe there's some risk. But I think when we touched on it last time, Monique, you were a little skeptical that maybe that was the right way to look at this thing, and like I said, if I look at the Bloomberg Galaxy Crypto Index, it was up over 50% at one point this year. So maybe there is something else that's driving crypto besides what Tony and I are talking about. So in your world, in your mind, what do you see as the big driver for crypto this year?
So basically, so last year it was really hard, right? Because we had Terra Luna and then all the contagion all the way to FTX in November. And that really affected. So towards the end of the year was like a sell-off. And on top of that, end of the year, a lot of people does deleveraging, and a lot of people realizing some losses to take advantage of tax portfolios. So as soon as you turn into January, all the bad leverage is gone. People that do not believe in the industry is gone. So only the actually good projects last. So, and what happens is that a lot of people start taking advantage of almost like going to a clearance, right? You have like Solana under $10. It's like almost nothing, right? So a lot of VCs start putting a lot of money back into crypto because you cross the year, and at the same time, everything very, very, very low. So they really, really pushed the prices in January. So January, I mean, not only Bitcoin, but all the altcoins too. There was a huge up. Now February is a little bit more unch, so it's not that it's strong as January, but we had a good rally for first quarter of the year. Not yet total quarter, but January, February, yeah.
So it's interesting. You talk about Solana and you talk about you got below $10, et cetera. But if you look at the market cap, it's still around $8 billion now, right? It's still a very big market cap for a coin. So it's not like it got to a penny stock.
Yes, so it is still a very strong project. It's going to take a lot longer to recover by what happened, especially because its association with FTX. So it created a problem. So that's why Solana went down so much. But there's a lot of investors that truly believe in Solana as a project. They've been having some problems, technical problems, outage and things like that, because they couldn't provide what they're promising, the way they were promising in terms of how speed, the output, and everything for a layer one. But in the long term, I mean, a lot of people believe in the community. A lot of people believe in the developers, what they're building there. So there's a lot of people still believing in them. It's going to take time, maybe, hopefully, because they're a very strong team. But yeah, but that's kind of like what happened.
So you mentioned a few of the other crises, but maybe I want to get your opinion on the most recent crisis, which is kind of shaking the crypto markets and investors, and that's Silvergate, that basically the crypto bank that had its own internal network, the Silvergate Exchange Network, where a lot of people who were in the crypto industry and had their deposits there were able to transact things internally. And now there's basically been a run on the bank, and we've seen a run on the bank, whether it's in the crypto world or the traditional finance world, it usually doesn't end well, and it can impact everybody who had some assets tied up there. So what do you know about Silvergate, and how is that impacting people in the crypto industry? How is that slowing things down? How is it making people maybe think twice before making investments?
Well, that's the thing. There's not a lot of banks involved in crypto. So it's actually a shame that this happened. I mean, they are also consequences of FTX. So they end up not having enough. They had to sell some debts to pay for some loans that were not repaid. So they got hit by the FTX wave. And then recently Coinbase said they're not going to do business with them. So that was like a big thing. I think that it got impacted last week. Definitely it got impacted. But I think over time, these will come back. I mean, that is a problem with a lot of banks not going to do business with crypto. But I believe that over time, another player will come and take over the market that they left behind.
Yeah, of course. I mean, you can certainly see that and when there is money to be made, I'm sure there will be other players coming trying to get their cut of that money, without a doubt. That is definitely human nature for sure. But it is interesting how intertwined so many of these things really are. I mean, you mentioned that kind of maybe the first domino to fall was Terra Luna, and we've seen that impacted Three Arrows Capital, impacted Genesis, impacted FTX, which then, because Alameda was a big holder of Grayscale, of the GBTC and ETHE trust, we've seen the net asset values of those kind of come up to significant discounts. I think the Grayscale ETH product is about a 60% discount. I think around Bitcoin, the Bitcoin product is about a 45% discount. Because why? Because Alameda held a lot, and so that caused even Digital Currency Group, which holds a number of things, including Grayscale, and was impacted by Genesis, to have to report what they're doing. And a week ago, they reported $1 billion loss, and talked about having cash on hand of about $260 million. And so crypto has gone through a series of crises, a waterfall crisis, if you will. And as we've seen, in the great financial crisis, or as we saw even in the kind of going back in the tech bubble. You guys probably aren't old enough, but I am. It certainly takes a long time to work through these issues, and you need a lot of time to kind of heal through some of those things. And so I think that to me is what I look at it as something that I think investors need to be aware of, is that, there's a lot of infrastructure and logistics that were set up to handle clearing and trades, et cetera, that has to be rebuilt and rewired, if you will, for some of these things to start to work as smoothly as they were before. But before, kind of building on that a little bit, Tony, I want to get your take on this, because we just mentioned a lot of different dominoes that have fallen in crypto. And I know we had talked before on a podcast about, you were looking at reg tech, and you were looking at what some of the regulators might be doing in terms of the crypto space. Any updates on how the regulators are thinking about this crypto space? To my knowledge, we still haven't really seen CFTC or SEC come out with anything definitive, even though there might be a little bit more guidance at the edges. What should we be thinking about from a regulatory standpoint?
Well, Rich, I think this is a very critical issue in terms of the crypto regulation. Well, based on my research, that what we have mainly found out that the regulatory framework does have a huge impact about the crypto's valuation. Well, in terms of regulatory framework, there are actually mainly two factor into consideration. One is the tax treatment and tax consequence. The other is the enforcement of the crypto trading and investment, right? Talking about the tax treatment or tax consequence, because we know in the US, mainly we treat the crypto as one kind of asset or property. So definitely for people or investors investing into the crypto assets, this will be treated as an asset. You pay the tax over the profit, and then you can actually deduct the tax over your investment loss. So this is kind of example of kind of a tax treatment. In other countries, like there might be very favorable tax consequences, tax treatment. For instance, like in Singapore, or in even like maybe South Korea, in Hong Kong, where actually we see some kind of a huge tax consequence. That's why actually it divide basically the allocation of the crypto and where the crypto will be traded. And sometimes it actually causes a huge valuation deviation for crypto. Now, this is the first criteria of the regulation framework. The second will be the enforcement about the crypto asset classes, and also the valuation enforcement. Now, in the U.S., we have a very extreme law prohibits regulation over the crypto investment at the moment. Some of the countries, including the U.S. and China, don't allow the crypto will be introduced to basically the general citizens. And in China, it's even more stringent, that they don't even allow the trading for Bitcoin and Ethereum. Here in the U.S., we do allow them, but we don't allow for the people call it an ICO, more like generic IPO to the equity. It's more of an ICO to the general public here. Now here we just more issue. One of the major issues for the enforcement here in the U.S. when the regulators should take into consideration is the money laundering, right? This is people can use because of the anonymity of the characteristic of the crypto. Some group, including crimes, they use the crypto as one kind of like venue to do the money laundering. Apparently, this is one big issue here, big consideration here. Even though the CFTC and also SEC right now, they have different view in terms of which entity should actually take the regulation over the crypto asset, but they all agree that this is anti-monetary law should be applied to the crypto asset right at this point. CFTC still think that they will be able to take the main lead into in terms of crypto regulation, but SEC say, well, if any entity or institution introduce the ICO to the mass population, mass citizen here, that it will be treated as a security. Then they have to file accordingly as a security and to be approved by the SEC before they can do so. Well, FTX is one great example for us to look into this, because FTX apparently mainly they do not actually sell any coins or any crypto directly to any like general public, but they do actually sell this, raise capital from the institution. Now, because of the right now, we all know the fall down of the FTX, it mainly actually incurs huge loss to institution. From the regulator perspective is, should we actually take that into consideration, is not only just put it into a framework for the general public, but also should actually have some kind of enforcement consideration for institutional investment. This is also another factor that should be considered at this moment. Now, from general perspective, is the law enforcement is always slow compared to the technology advancements. Taking blockchain as one example, blockchain technology had advanced dramatically. We have seen so many protocols coming out, Bitcoin, Ethereum, Solana, all trying to solving some transaction issue here, which actually might claim they have some kind of a technology advantage to disrupt the traditional finance industry, right? Whenever you actually go into that direction, I think the law enforcement, the regulatory agency should take a more prompt step right now than ever in the past to come into play. Right now, to put a regulatory framework more adapted to the fast changing technology environment at this moment. FTS give us a great warning that we definitely should take that to think it as more of urgent issue than ever before.
Yeah, and you bring up a great point, and I mean, to me, when I think about crypto and regulation, there's kind of two sides. There's two sides of the coin here, which I think is difficult, and I think it's difficult for a lot of people within the space to understand. I know I wrote a blog about this for a crypto company last year. On the one hand, crypto is meant to be decentralized, and so we shouldn't have any regulation from central authorities. And it's not even clear, if we did, which country should be the one to regulate it, because as you mentioned, these are transactions that are going on globally. But on the other hand, one of the big bull stories for the crypto market broadly would be institutional adoption. And I think especially after these crises that we've seen in these situations we've gone through, the ones we've mentioned, I don't see institutions coming back in any sort of meaningful size until there is a little bit more clarity from a regulatory standpoint. So I think from my standpoint, at this point, while before we used to be able to talk about how whether or not we should have regulation, at this point, it's a question of when can we get it and what clarity will we get from it before we can even start to move forward in any sort of scale. But I wanted to get your thoughts on that, Monique, because you've been much more directly involved in investing and working with institutions, working with companies in crypto. How are they looking at regulation? Is it a necessary evil? Is it something that we need at this point as a catalyst for further gains, or is it still a lot of pushback on whether or not we even need it?
So there are some people that would say we're going to go fully decentralized. Some people say we have to regulate. It's going to be a world of both. You cannot not have regulation, right? As you said, the institution adoption, you're going to need the regulation there, especially when you're dealing all those centralized exchanges like Coinbase and Kraken and others, right? And including like FTX. So my one thing is that regulation more as guidelines, not exactly regulations like the way they're trying to enforce. And I think that's the problem that's happening now. You go out there and you see the SEC saying that everything is a security except for Bitcoin. I mean, it's not like that, right? So it's like randomly just almost like picking on some players there. Like I don't know if you guys remember a couple of weeks ago, Kraken's exchange here in US, they got fined for $30 million, so they cannot stake anymore here. So basically, they still can give this product to people outside the United States, but here in the United States you can't. And then word on the streets is that actually some projects may gonna be receiving letters from SEC too, so we may gotta hear some news soon. Maybe not, maybe just rumors. But these like almost like a witch hunting to crypto. It's not really healthy because the technology is here. We cannot just you cannot just ignore, right? I mean, this is like we will adapt to one way or the other. And so we're definitely going to need a regulation more in terms of a guideline. And I think it's important for regulators to really accept the work of like the players, right? Not just shut down them, and then work together to come out with a reasonable guidelines.
I want to add one comment to both of your thought just now. I actually strongly agree that for any regulation that would work in the blockchain or crypto domain, that international collaboration is very necessary, highly necessary. We cannot just have one country to have come up with the regulation framework while the other country don't. And this would push whatever the crypto fiesta, or even some people who have the intention to commit a crime to fly to those countries without any regulation. This is because of decentralized nature, right? It's just like money never sleep. This is well applied to the crypto domain, well applied. So international collaboration is definitely highly desired. That's why if U.S. want to actually set up regulation, must actually comply with the rule together set up by other major entity in the world, such as EU as well. I think this is why right now the Senate and Congress, they are some kind of a slow in terms of setting up the regulation and even the guidance to regulate the development for the crypto industry, because we don't want to actually discourage the innovation while still protecting the interests of investor. This is actually very tough given the decentralized nature of the blockchain and also the crypto tokens above that, right? Now, given we definitely want to actually promote the application of the blockchain technology, but simultaneously try to maybe limit the downsides about the potential regulation issue on top of the tokens, cryptos, in another perspective.
No, and you bring up a great point, Tony. And let's not forget that, and everyone talks about criminals using crypto, but before that, they were using dollars, right? Dollars are still the favorite vehicle of choice for criminals. And that's why we had to set up the SWIFT network, which is a global network of banks across the country or across the globe who could kind of help to track that down for every country that's involved in it. So definitely that sort of multinational framework, it has precedence to it. But with the last time we have left here, I wanted to pivot really quickly to another subject because Monique, you've talked about the technology and the developers that are coming into crypto, and Tony, you just mentioned the innovation that we're seeing. And I know when I talk to students or I talk to friends about crypto, I tell them that in my mind, maybe I'm not thinking about this. I tell them that in my mind, maybe I'm not thinking about. Sorry, getting some feedback. What I tell them is that, my mind, crypto is really just startup technology that's disrupting a lot of different industries, and the tokens that we use are just different ways. In my mind, crypto is really just startup technology that's disrupting. So I wanted to think about the kind of technology disruptive nature of. About the kind of technical nature of. So Tony, maybe I could start with you because I know you've been working on this a lot. What are some of, everyone's talked about ChatGPT lately, but what are some of the developments on the AI framework that as investors we should be thinking about?
Well, definitely, there are actually 3 layers of the AI in terms of technology advancements, especially with introduction of the ChatGPT at the late of last year. Now, the whole industry, actually, including the finance industry, I think this is more of the relevant to our audience here. The finance industry might actually face huge disruption and opportunity ahead of us going forward. The ChatGPT revealed the capability of AI in a broad perspective. Now, if we want to actually just narrow down about how ChatGPT can be applied into the finance industry, this turned out to be extremely amazing. Well, one of the major issues for the in the financial industry in the past is, especially in the financial service industry, what we can do is there are a lot of financial advisory service out there, right? It's like we have seen a lot of financial professionals. Most of the typical issue is financial professional or financial advisor tend to answer the questions, the same question again. Now with a very ChatGPT, now it actually turned out to be AI is able to answer those kind of repeated questions quite well. They can actually understand the context. They have reached to the second level of the AI. That means logical reasoning. In the past, people always talking about AI can already have a huge memory. They have a repeated composition. They can memorize things. But they could not understand things. Now here, the ChatGPT show us a probability model can help people or help the AI to understand the context. Now the context will become extremely useful here in terms of the automated financial service. This is one major thing where we could see. The other thing is now the ChatGPT also opened a door for lots of application. For instance, ChatGPT can actually understand your meaning and convert the text into an audio, can convert a text into a video. It's help you to create a video. For instance, like maybe in the future, we pretty much don't need 3 of us to give the macro matter broadcast. We can just tell, hey, the ChatGPT, this is something that in context what we want to talk about, then it will automatically generate all of the script and then create a video for 3 of us, like called digital humans within the audio content. This has turned out to be amazing. So a lot of us, lots of traditional finance job could be replaced instantaneously, right? This is the very, very powerful. Very, very powerful. The third thing, like even, but we have to understand at this moment the limitation of the ChatGPT, because it does not actually have, it does still require a lot of the training data, large of data set to help the AI to understand. People say, well, at this moment, if I ask the AI to do the creative thing, innovation, the AI couldn't do it. But if we just look back the history of the technology advancement in the past 50 years, we continuously to think that almost at every moment, every major milestone of technology development, there was a limitation right at the beginning. However, with the capital or cash flow continuously into the area, that we can see that technology can advance amazingly. I think that's going to happen to the AI as well. ChatGPT does actually open a huge potential for us to think that maybe over the next few years, maybe five or 6 years, then it will actually reach to the level that it could create innovation. But that also call for the regulation of the AI, which turned out to be another major topic.
Well, and as CFA charter holders, we know that ethics is a big part of the examinations we went through, and it's certainly an important topic when it comes to this AI. But we also know from the CFA Institute, when they just published the report on the future of investment management, they did talk about our artificial intelligence and machine learning as being a big part of the future of investment management. But Monique, as I introduced you before, you are an expert in quantitative finance. And so tell us from your perspective how you see AI and maybe machine learning, which is a subset, how that is already impacting the work that you do or that you see being done, and how you see it changing maybe going forward too.
Oh, definitely. It's going to take my job. I'm going to be out of job soon. So they already have some emerging projects just building like mini hedge funds, quant hedge funds. So basically, it's all AI based. And if you think as a process, let's say you have a quant fund, right? What do you do first? You get data. From the data, you analyze the data. Then you build your portfolios, right? Then you run the performance, and then you kind of like make changes and like do all the research to improve your models and things like that. Now, when you think about, okay, we use machine learning to help with the data and build models and things like that. But what's AI here in terms of going to the next step is the learning piece, right? When you have the recursive learning, and then that's what the key thing, because once you reach to the end and they learn, they can go back and get an even more efficient, better product than before, just by basically just learning. That's what it is. So think about robot that's learning everything and can process the data way faster than I can do in my models. If I run my model, and you can have like 20 models, 100 models, I will have to go one by one and pick one. Like if you imagine a trading model, right? They last only for a few months and then change. It depends on what's happening in the world. They can do like that, right? They can consume the amount of the data. They can run everything and then can learn and go back and make it better, more efficient. So I don't think in my lifetime here I'm gonna run out of jobs. But I don't know, in the future, or the quant's gonna be. It feels like when we were in the trading in the pit, right? People screaming and trading, and now nobody trades in the pit anymore. Everybody goes to the computers. So the quants have their days still counted. Maybe not. But yeah, it's powerful. There are projects already doing this, basically tokenizing a hedge fund. That's what it is.
Yes. Absolutely right. And go ahead, Tony.
Yes, I want to add one comment over what Monique just said. Actually, it's very, very powerful. Now, think about the job security point of view. As a financial professional, definitely I have some concern about the future prospect of my career, right? Now, with the introduction of the ChatGPT and AI in more generic, a lot of the fundamental analysis or analysis of the industry can be done by AI in just a minute. While traditionally, which might take us thousands of or hundreds of hours to conduct the fundamental analysis, right? It could actually compare from the Microsoft demo. We can see that like a ChatGPT can help to analyze the earning report 10K and 10Q just in a few seconds. Now versus us, if we teach a class, Rich, you teach a class about doing the investment and doing the analysis about based on the financial statement, right? Now here, maybe in the future, our job would completely change in terms of doing the detailed analysis. What we might need to teach in the financial major is how do you construct the prompt to use the ChatGPT to do the study. Instead of an introduction of financial statement analysis, you don't need to, because the AI can do it much faster, much efficiently just for you. Now, I think, for instance, I think lots of hedge funds and financial institutions have already started the process. For instance, like Ray Dalio's Bridgewater, I think they decided to fire more than 100 of employees, I think last week. They say, what we intended to do is just to use ChatGPT to replace those 100 employees that we just fired. This is, well, actually scary from a financial professional perspective, right? Now here for us, I think just sooner or later that most of the job could be replaced, but replace for us is what should we do at this moment, either to be more adaptive or should we do something like maybe more difficult to be replaced by the AI? at this moment. This is something that we should, as a financial professional, we need to think over and over again.
No, you brought up a great point, and we know even if we're building a simple DCF model, we know that it's not about the building a model; it's about the questions you ask of the model. So I think when you talk about the prompt, that's really important. And at least in my classes, I show them the movie Terminator 2 and tell them that we have to be John Connor and outthink the machines. And so we're already trying to prepare for that post-apocalyptic world that you guys are both describing. And so on that note, I think I'm going to leave it there. I will see you both in a couple of weeks. We'll figure out what we're going to talk about, but I really enjoyed the discussion about crypto and about AI. I know we only scratched the surface, but I hope people understand, our members out there understand how many interesting things are going on in the world of higher technology and finance. So Tony and Monique, thanks for joining me again.
Thank you, Rich.
Thank you, Rich. Thank you, Monique. I think it's a very interesting discussion. We'd like to continue this.